Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar. An immediate countering bullish engulfing pattern yesterday after the previous session's key reversal down. Now I have to say this is typical behaviour on the market's approach and run up to the previously highlighted upper bear channel line, currently at 105.65, of the mid-July to date bear channel, and that's currently 103.13 to 105.65, and it's highlighted in bright red on my daily chart. It was another run up and hesitation as prices pierced the upper bear channel line but ended up only closing right on it. Though this bear channel originated in July, its main effects were felt in early September when it caused a breakdown below the mid-March to mid-July bull channel, the one highlighted in dark blue on my daily chart. Targets for this original bull channel on the downside were a primary target in the 105.95 zone and a secondary, much harder to reach target X1 in the 101.35 zone. The primary target was achieved in late August, but the secondary target X1 is still open, though still looking very hard to reach, especially as the market has recently decided to use the February and March 2017 lows at 104.92 as a base. Please keep in mind that the upper bear channel line drops down through this support within the next week and a bit, so something will have to give. So far today, the market seems to be stabilizing over the upper bear channel line, or rather trying to stabilize over it. Cable, aka sterling against the US dollar. A quite long-legged but still indecisive spinning top pattern yesterday, with an interesting dip on the downside. The market continues to exhibit a wide-ranging indecision between the May low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. The main recent feature here had been the breakdown below and out of the March to August rising wedge pattern, which is highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. The primary target was achieved in mid-September, but the secondary target looks very much out of reach as the market has decided to hesitate between the May 2020 low at 120.73 and the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16. So far today, well, another attempt lower towards the May 2020 low, but shying away from really testing it. I continue to wonder if the action since mid-August may not have elements of a bearish halfway hesitation or double bottom about it all. It is still too early to say which it may be, but today is looking a little bit like a possible hammer pattern right now. Euro sterling. A strong bullish white soldier yesterday, one that finally pierced and closed over the overhead slowly declining long moving average, currently 86.94, highlighted in gold on my daily chart, and halted ahead of the next resistance formed by the April 2021 high at 87.19. The market had recently been caught between this overhead long moving average and below by the twin supports of the rising short medium moving average, currently 86.15, and the medium moving average, currently 86.00. The action yesterday, if sustained, now raises the question as to whether the action since early September may be a bullish halfway hesitation on top of the recent roof pattern. You see, the overall bigger picture pattern here had been the June to September roof pattern, with potential targets for this pattern of a primary target X above at the 87.42 area and a harder to reach secondary target X1 in the 88.18 area. The long moving average had capped this opportunity on the upside, but it now looks like the market may finally be free of it, so watch this space. Now, so far today, a further move higher over the April 2021 high, and not even using the long moving average as a base of support this time. I've decided to lay out a potential bullish halfway hesitation target X2 in the 87.95 area. US dollar against the Indian rupee. An immediate countering bearish black crow yesterday That could be seen as a bearish black Maribosa to the previous session's bullish white soldier. There was also a hanging man pattern. What it did show was the bearish power of the overhead combination of the October 2022 high at 83.27 and the breached, but so far unbroken, mid-August to date downtrend currently at 83.23. The bearish pressure was enough to break the July to date uptrend currently at 83.23 also. This action is quite interesting, as I've recently been studying this daily chart in greater detail, and I've pointed out a possible, if ramshackle, late July to date ascending triangle. I haven't highlighted it on my daily chart, but it is made up of the late July to date uptrend and the previously mentioned downtrend. Yesterday's action, if it is confirmed, would mean that we have a break below the ascending triangle. And I can then set out possible targets for such a pattern. However, I would caution you on the possibility of false breaks here in either direction, and I would need further confirmation of this move to set it out properly. So watch this space. So far today, a further attempt lower, but only as far as the next support below. That's the slowly rising short medium moving average, currently 83.02, and the late September low at 8300. Beyond this, the next support is the low and Fibonacci combination at 82.76 and the slowly rising medium moving average currently 82.64. However, so far today the market has pulled back from really trying lower and is looking a bit indecisive right now. US dollar against the Brazilian real. A strange piece of action yesterday, an indecisive spinning top that was also a key reversal up. The market punched up through the combination of the Fibonacci at a 507.39 and the rising short moving average, currently 507.95, but failed to close over either, instead closing for a second consecutive time over the other Fibonacci line at 505.73. Overall, the market continues to be moving within the breached but ultimately still valid November 2022 to date bear channel, currently 471.19 to 517.10. And that's highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line, capping the market in early October. Meanwhile, below we have a whole load of supports consisting of the flatlining long moving average, currently at 499.96, and that's highlighted in gold on my daily chart. Then we have the upper trend line extension, the upper trend line extension highlighted in purple on my daily chart of the August to September rectangle pattern, currently at 498.11. The rising short medium moving average, currently 497.70. And the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61. Looking above, we have the interesting 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87 before the market reaches the upper bear trend line. US dollar against the Mexican peso. A third bullish white soldier yesterday and a continuing suitable follow-on higher to the recent immediate countering bullish harami. It was the highest close here since late March. The market continues to move higher and away from the long moving average below, currently at 1772.84, closing significantly for a second consecutive session over the recent attractor of the bright red neckline, currently at 1804.98, of the July to September lopsided reverse head and shoulders bottom, and for the first time over the neckline highlighted in purple of the old but still influential January to May 2021 head and shoulders top, currently at 1823.68. The market has already managed to achieve some notable targets on the top side. The primary target for the March to July descending wedge pattern, the pattern highlighted in bright green on my daily chart, as was the primary target for the break higher out of the longer term September 2022 to October 2023 bear channel. That's the pattern highlighted in dark blue on my daily chart. However, the harder to reach secondary target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel, both at 1894 area, well, those are still open higher up. I also have not placed any primary or secondary targets for the reverse head and shoulders bottom as yet, mainly because we're still close to the neckline, and because I'd like to see target X2 either reached or rejected. Finally, I've previously mentioned the September to date bull channel, currently 17,996 to 18,8468, highlighted in dark green on my daily chart. Now, I'm beginning to pay close attention to this bull channel. So far today, a limited move higher from the close, still capped by yesterday's high, but not venturing lower, not yet at least. And that's not to the purple neckline. The market continues to approach early October's high at 1848.20 and the February 2020 low at 1851.71. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.